In 2016, Britain voted to leave the European Union. Supporters called it taking back control. Critics called it economic self-harm. I call it the world's messiest divorce settlement, complete with custody battles over fish. But beyond the drama, Brexit is an economic experiment. So let's ask, what has it really done for Britain's economy? Was it really worth it? And what comes next? To really understand Brexit, we need to rewind a little bit. Britain joined the European Economic Community in 1973, hoping to boost trade and growth.
Then we were in, 1st of January 1973. We had joined, and noticed the headlines in the newspapers then, who in the main were all pro our being in the European community.
By the 1990s, the EU had become a single market for free movement of goods, services, capital and people, commonly known as the Four Freedoms. But Britain always kept one foot out the door. It never adopted the euro, it negotiated opt-outs.
I welcome the debate because it's brought into the open an equally fundamental question, the choice between two kinds of Europe. A Europe based on the widest possible freedom for enterprise, or a Europe governed by socialist methods of centralized control and regulation.
In June 2016, 52% Brits voted to leave the EU. Why, you may ask? Well, for many, it was about sovereignty. The idea that decisions about Britain should be made in Westminster, not Brussels. Others were driven by immigration concerns. And then there was the economic argument. For example, the Leave campaigners promised that money sent to the EU could instead fund the NHS. Of course, the vote shocked the financial markets. The pound plunged by nearly 10% overnight. A textbook currency shock. Investors hate uncertainty, and Brexit was uncertainty on steroids. Now let's come to the economics of Brexit. What changed? Let's break it down. To start with, Britain loses its trade and comparative advantage. Before Brexit, the UK had frictionless trade with the EU, its largest market. After Brexit, custom checks and paperwork raised costs. Economists call this non-tariff barriers, invisible frictions and taxes that slow down trade. Next comes the impact on foreign direct investment. The UK used to be the EU's gateway for global firms. After Brexit, some shifted headquarters to Frankfurt, Paris or Dublin. That's a classic case of the disappearing location advantage. And thirdly, we have the negative impact on the labor markets. Free movement ended. Sectors like farming, hospitality and healthcare lost EU workers. The result? Labor shortages and rising wages. Good for some workers, but bad for productivity and efficiency. Finally, the burden of currency fluctuation and inflation. A weaker pound made imports pricier. That's what we call imported inflation, when your currency buys less abroad. The pros were sovereignty over immigration and regulation, ability to strike independent trade deals, more political control over domestic policy. But there were also cons, like the slower GDP growth compared to EU peers, higher trade costs with its biggest partner, less global bargaining power. In short, sovereignty gained but efficiency lost. Today's study suggests that the UK economy is about 4 to 5% smaller than it would have been without Brexit. That's billions in lost output, or if you prefer, enough money to buy every Brit free tea for decades. So, what's next? Economists see three possible futures. Firstly, the optimist path. Britain adapts, builds new trade networks and invests in innovation, turning a breakup into a glow-up.
Tanya, free university, affordable homes, and a sense that life was getting better.
Secondly, the stagnation path. Trade frictions persist, investment lags, and the UK falls behind the EU growth.
Promise of progress is broken. The 90s are remembered as the last time the UK felt like it was moving forward. Now, resignation has replaced hope.
Thirdly, the halfway path. Britain edges closer to the EU again. Not full membership, but alignment. In conclusion, Brexit proves that economics is about trade-offs. The UK gained sovereignty, but at a cost to efficiency and growth. Whether that trade-off was worth it? Well, it depends on whether you value politics over economics. So was Brexit UK's boldest move or its biggest mistake? Tell me what you think in the comments. Like, share, subscribe for more such history meets economics deep dives. Until then, stay curious and don't skip your eco classes.